All right, let's dive in. We've got a really interesting one today.
Yeah, looking forward to this one.
Dixon Technologies.
Heard of them?
I hadn't until you sent over this AGM notice and annual report.
Yeah.
But wow, they're kind of like a powerhouse, you know?
Yeah, they're right in the heart of this boom that's happening in the Indian electronics market.
And this isn't just some small-time operation, right?
Oh, no, no, no. We're talking about the ESDM market.
ESD,
That's
yeah.
electronic system design and manufacturing. And it's projected to go from like 2 trillion to a mind-blowing euro 9 trillion by 2028.
Whoa, okay, 9 trillion. That's like everyone in India buying like 10 new phones, right?
Well, not exactly, but it gives you a sense of the scale, right? And the report actually points to some pretty hard numbers to back this up. Like, you know how we used to import tons of smartphones?
Yeah, right.
Well, that's practically vanished now. Domestic production has just skyrocketed.
So made in India is really taking off.
Exactly. And it's not just for the domestic market either. Mobile phone exports, get this, they more than doubled last year. We're talking over 900 billion?
So wait, they're making phones in India and then shipping them out all over the world.
Yep. And a few things are fueling this growth, right? First, you've got this strong consumer economy in India. People want the latest gadgets, and they've got the money to
Oh,
spend.
makes sense.
Then on top of that, you've got the government really pushing for domestic production.
Right, the whole Atmanirbhar Bharat thing, self-reliant India.
Exactly. And they're putting their money where their mouth is.
Oh yeah, how so?
Well, like, Dixon just got this contract to manufacture laptops under the government's production-linked incentive scheme, and that's just one piece of it. There's this massive $30 billion with a B fiscal incentive package for the whole sector.
Whoa, okay, so the government is like all in on this.
Big time. It's clearly a strategic priority for them. They want to make India a global hub for electronics manufacturing.
Wow. So where does Dixon fit in?
Well, they're not just assembling stuff, they're actually designing and manufacturing these products, and then they're sold under other brand names. They're what's called an ODM, original design manufacturer.
So they're like the brains behind the scenes.
Yeah, you could say that. They're a key partner to some major Indian and global electronics companies.
Got it. And the report mentions they're involved in everything from mobile phones and TVs to refrigerators, wearables, even laptops now.
Right, and that's a big part of their strategy. Having such a diverse product portfolio gives them resilience. If one market slows down, they've got others to fall back on.
Smart. So they're not putting all their eggs in one basket.
Exactly. Plus, it shows they've got the expertise to handle different manufacturing processes and meet a wide range of customer needs.
So are they just like sticking with being an ODM, or are they trying to do more?
Actually, they're moving towards what they call deeper manufacturing. Basically, they're bringing more of the manufacturing process in-house.
Okay, interesting. Can you give an example?
Sure. They've set up their own SMT lines for PCBA, that's printed circuit board assembly, specifically for wearables and hearables.
So they're making more of the components themselves.
Exactly, which gives them greater control over the supply chain. That's crucial these days, and it can lead to better profit margins, too.
That's clever. So they're thinking long-term, not just quick profits.
Absolutely. And speaking of long-term thinking, they're also heavily invested in R&D. 6 R&D centers, and they pumped 16 crore into research and development last year.
Okay, so they're not just riding the wave. They're trying to, like, create the next wave.
Exactly. They know that to stay ahead in this industry, you got to constantly innovate.
All right, so they're growing like crazy. They've got a diverse product portfolio, and they're investing in the future. But how are their financials actually looking? Are they actually making money?
Oh, yeah. Their financial health is rock solid. Strong revenue growth, healthy margins, consistently profitable. I mean, just look at their revenue for FY24 euros, 6411.40 crore. That's like selling, I don't know, a phone to every person in Singapore or something.
Wow, okay. They're not messing around. So it's not just hype. They're actually delivering the goods.
Definitely. And their operating profit also tells a positive story. 487.78 crore in FY24. It seems their strategy of having different product lines is really paying off. Each segment contributes to the overall bottom line.
Okay, so revenue, profit, all looking good. What about some of those other financial metrics like ROCE, ROE? I hear those thrown around a lot.
Good point. So ROCE, that's return on capital employed, basically tells you how efficiently they're using their capital to generate profits, and theirs is a very healthy 28%.
So for every 100 rupees they invest, they get 28 back in profit.
Exactly. Pretty good, right? And ROE, return on equity, measures how much profit they generate for their shareholders. They're currently at a solid 25%. And both of these figures have been on an upward trend, shows they're getting more efficient and delivering strong returns.
That's what investors want to hear.
For sure. And they're not just hoarding the cash either. They've been consistently paying out dividends. In fact, they're proposing a final dividend of 250% for FY24. That's a clear signal that they're committed to creating value for shareholders.
Wow, 250%. That's a lot. All right, so financially, they're looking pretty good. They've got the revenue, the profit, the efficiency, all that. But every business has challenges, right?
Mm-hmm.
What are some of the risks Dixon is facing?
Well, one thing they highlight is price erosion, particularly in their lighting division. That and subdued consumer demand. It's a competitive market out there. Keeping those profit margins up can be tough.
So even with all this growth, there are still pressures.
Definitely. And then there are the usual suspects. Compliance risk.
Compliance risk, meaning.
They operate in a pretty highly regulated environment, so any missteps could lead to, fines, penalties, all that. Then you've got cybersecurity threats. Those are a concern for any company these days. And of course, potential disruptions in the supply chain.
Yeah, those are all very real risks. So it sounds like they're aware of these challenges. Are they doing anything to mitigate them?
Oh, yeah. They've got a comprehensive risk management framework in place. They talk about their focus on data security, their ISO 2701.2017 certification, and their code of conduct to ensure ethical operations.
So they're not just crossing their fingers and hoping to the best.
Definitely not. They're actively addressing these risks, which is a good sign.
All right, so we've talked about their growth, their business model, the financials, the risks. But what about the people behind all this? Who's steering the ship?
Well, the key figures here are Mr. Sunil Vachani, the executive chairman, and Mr. Atul Bilal, the vice chairman and managing director.
Okay. What can you tell us about them? What's their background?
They've both got a ton of experience in the electronics industry, and they've played a crucial role in shaping Dixon's growth strategy. And one thing that stands out is their emphasis on corporate governance. The report highlights their comprehensive policies and their commitment to transparency.
So they're not just about profits, they're running the company responsibly.
Exactly. And it's not just talk either. They've received awards for their CSR leadership.
CSR, corporate social responsibility, right?
Yep. And their POSH policy implementation.
TOSH, yeah.
Prevention of sexual harassment. So they're taking concrete steps to create a safe and inclusive workplace.
Good to hear. So they're financially sound, strong leadership, and they're committed to ethical practices. But who actually owns this company? Who are the main stakeholders?
Well, the promoters, mainly the Vachani family, they hold a significant chunk, around 35% as of March 2024.
So the founders are still very much involved, shows confidence in the company.
Yeah, for sure. And then you've got some big institutional investors, like the Life Insurance Corporation of India, LIC. They hold a sizable stake, too.
Really? LIC? Interesting. Although I did notice that they've actually been reducing their stake recently.
Yeah, that's true. But institutional investors adjust their holdings all the time. Lots of factors at play there.
True. But still, something to keep an eye on. So we've covered a lot of ground here, but there's one more thing we need to talk about.
Oh, yeah, we can't forget about related party transactions.
Related party transactions. That sounds a bit complicated.
It can be, but it's important. Essentially, these are transactions between Dixon and entities they have close ties with, like their subsidiaries.
So like doing business with your family or close friends, basically.
Yeah, kind of like that.
But why is this so important?
Because there's always a potential for conflict of interest, right? So companies need to be really transparent about these dealings and make sure they're done fairly.
Makes sense. So what kinds of related party transactions are they involved in?
Well, their major transactions are with subsidiaries like Paget Electronics and Ismartu India, both in the electronics manufacturing space.
So keeping things in the family, so to speak.
Right. But the report stresses that these are all done at arm's length, meaning no special favors or sweetheart deals.
That's good. But are they getting any kind of outside approval for these deals?
Actually, yeah. To be extra transparent, they're seeking shareholder approval for upcoming transactions with Dixon Electro Appliances Private Limited, one of their subsidiaries. It's all detailed out in the AGM notice.
So they're not just assuming it's okay, they're actually going to their shareholders and being like, hey, what do you guys think about this?
Exactly. Transparency is key, especially when it comes to these kinds of transactions. Builds trust with investors.
Absolutely. So we've covered a lot in this first part of our deep dive.
Hmm.
We've looked at Dixon's growth in this booming Indian ESDM market, their diverse business model, their solid financials, their strong leadership team, and even those potentially tricky related party transactions.
And don't forget their commitment to ethical business practices and social responsibility. They seem to be trying to do things the right way, not just chasing profits.
It's a pretty impressive story so far. But of course, there are always challenges ahead. Competition, risks to navigate, staying ahead of the technology curve.
It's a lot to juggle. So the big question is, do they have what it takes to become a true global player in the electronics world?
That's what we'll be exploring in part 2.
Welcome back. Let's jump right back into our exploration of Dixon Technologies.
All right, so in part 1, we saw their crazy growth, the diverse product range, and their commitment to staying ahead of the curve with all that R&D stuff. But to really figure out if they can become a global player, we need to understand their long-term strategy.
Absolutely. And one thing that really jumps out from the report is their focus on Industry 4.0.
Industry 4.0, is that like the new iPhone or something?
Haha, no, it's basically about integrating digital tools and technologies into every part of their manufacturing process.
Okay, like robots making phones.
Kinda, yeah. Think smart machines, connected production lines, real-time data analysis, even AI-powered quality control.
Wow, that sounds super high-tech. But how does that actually help them compete on a global scale?
It's all about optimization, making their production workflows smoother, reducing downtime, and ultimately becoming much more efficient. Imagine, like, a well-oiled machine, but for electronics manufacturing.
A super efficient high-tech machine.
Exactly. But there's another piece to this whole Industry 4.0 thing that we can't ignore.
Oh, yeah? What's that?
The human element. All this automation, it has an impact on the workforce, right?
Right. So are they just, like, replacing people with robots?
Not quite. The report actually highlights their focus on training and development programs. They want to make sure their employees have the skills they need to thrive in this new era of manufacturing.
So upskilling the workforce to work alongside those super smart machines.
Exactly. And it's not just about technical skills either. They're trying to build a positive and engaging work environment.
Okay, like team building exercises and stuff.
Yeah, things like that. They talk about employee engagement surveys, leadership programs, cross-functional teams.
Sounds like they're really trying to create a good company culture.
They are. And it's paying off. They've even gotten a Great Place to Work certification for the past 3 years.
Not bad. All right, so they're building this like high-tech, people-centric manufacturing powerhouse. Pretty cool. But how does this all fit into like the bigger picture? What about global trends that might affect them?
Good question. And the report does talk about this. One big trend they highlight is India's rising role as a global manufacturing hub.
Right, I've heard about that. So they've got this home field advantage? Sort of.
You could say that. And it's being driven by favorable government policies and these shifts in global supply chains. But it's not all smooth sailing.
Yeah, there are always challenges, right? Like, wait.
Well, they mention compliance risk as a big one. Operating in a highly regulated environment, any slip-up could be costly.
Yeah, makes sense. Got to dot your I's and cross your T's. What else?
Cybersecurity. It's a huge concern for any company, especially in this digital age. Protecting sensitive data is paramount.
Yeah, those data breaches can be a nightmare. So are they doing anything to beef up their cybersecurity?
Absolutely. They talk about strengthening their data security measures and maintaining their ISO 27001.2013 certification, which is a global standard for information security.
So they're taking it seriously. Good to know. But what about the competition? How do they stack up against other big players in the electronics world?
Well, the report doesn't directly compare them to specific companies, but their market leadership in some segments, like LED TVs in India, that's a pretty strong indicator.
Yeah, being number one in a huge market like India, that's got to count for something.
Right. Plus, that ODM model we talked about, focusing on both design and manufacturing, that sets them apart.
So they're not just making cookie-cutter products, they're actually working with brands to create, like, unique solutions.
Exactly. But there's another aspect that's becoming increasingly important for companies these days.
Oh, yeah. What's that?
Sustainability. Consumers are demanding it, and investors are paying attention. It's not just a nice-to-have anymore. It's a business imperative.
Right. Everyone's going green these days. So is Dixon on board with this whole sustainability thing?
It seems so. The report has a whole section on their ESG initiatives, environmental, social, and governance.
ESG, okay. And what are they doing in that area?
They talk about reducing their environmental impact, promoting social responsibility, upholding ethical business practices.
Sounds good. But you know how some companies just do this greenwashing thing where they make all these claims but don't actually do
I
much?
know, right? But the report actually provides specific details, like they've installed solar panels at some facilities, they're switching to natural gas, and they're working on reducing water consumption.
So they're taking some concrete steps, but there's always room for improvement, right? Like, what could they do better?
Well, they mentioned they're working on figuring out their greenhouse gas emissions, which is a good start, but they could set some more ambitious targets for reducing those emissions.
And what about using more recycled materials? That seems to be a big thing these days.
Yeah, they could definitely explore that more and delve deeper into supply chain sustainability too.
All right, got to make sure everyone's on board with the whole sustainability thing, not just Dixon themselves.
Exactly. It's a complex issue, but it's essential for companies like Dixon, especially as consumers become more aware of where their products come from and how they're made.
So they're making progress, but there's always more to be done. Okay, before we wrap up this part, let's go back to that big question. Do they have what it takes to become a global electronics giant?
Honestly, based on what we've seen so far, I think they're well on their way. Strong financials, diverse business model, commitment to innovation, and now this growing focus on sustainability. They've got a lot of the right pieces in place.
Sounds promising, but they still got to face those challenges, right? Competition, keeping up with technology,
Of course, those challenges aren't going away. I think their success will depend on how well they can adapt and evolve, not just react to the industry changing around them.
being proactive, not reactive.
Got it. And that's what we'll dig into even further in part 3.
Welcome back to our deep dive. All right, so we spent the last two parts really getting to know Dixon Technologies. Impressive growth, solid financials, embracing new tech. What's not to like?
Right. They seem to be checking all the boxes. But now it's time to look ahead. What does the future hold for Dixon?
Yeah, let's try to predict the future. I know the report doesn't have specific financial projections, but based on what we've seen, what's your take on their growth potential?
Well, they're definitely in a growth phase, investing heavily in expanding their manufacturing, diversifying their products, boosting that R&D. Remember that laptop manufacturing contract they got from the government?
Oh yeah, the production-linked incentive scheme. That's a big deal.
It is. Shows how serious they are about grabbing a larger slice of the market. And it's not just organic growth either. They're making strategic acquisitions like that stake in Ismart U India to get into new segments.
Smart move. So they're playing the long game, thinking strategically. But even with all that going for them, there must be some potential bumps in the road, right?
Of course. I mean, competition is fierce, not just from other Indian companies, but global players too. They're all eyeing the Indian market.
It's a big pie. Everyone wants a piece.
Exactly. So Dixon can't just sit back and relax. They've got to stay agile, innovative, and really focus on what their customers need.
Keep pushing the boundaries. And let's not forget about how fast technology changes, especially in electronics.
Right. What's cutting edge today is obsolete tomorrow. So they've got to keep investing in R&D, exploring new technologies like AI and the Internet of Things, basically constantly adapting to stay ahead.
It's like a never-ending race. Stay ahead or get left behind.
Exactly. So they've got this tricky balancing act, pushing the boundaries of tech while managing all these risks and fending off the competition.
Sounds stressful. But I think they've got the right team and mindset to pull it off. What do you think?
I'm optimistic. They've shown they can adapt and innovate. Plus, their financials are strong, so they have the resources to invest in their future.
And they're not just focused on profits, right? They're trying to do business ethically and sustainably.
Right, which is a big draw for investors and customers these days. So yeah, I'm definitely bullish on Dixon.
Me too. It's been fascinating to really dig into their story. They're a company on the rise, and it seems like their journey is just getting started.
Absolutely. We've covered a lot in this deep dive. Their business model, their financials, leadership, the risks, their commitment to sustainability, but there's always more to learn.
So much more. So to everyone listening, we encourage you to check out the AGM notice and annual report yourself. Do your own research. It's a company worth watching for sure.
The story's just beginning to unfold.
And on that note, thanks for joining us on the Deep Dive. Until next time, keep exploring and keep learning.